If you're excited about real estate as much as I am, well, you're going to want to listen up because there is a dilemma in the real estate market. That dilemma is you need cash, and the reason why is because is expensive to put a down payment for renovations, etc. The whole 9 yards. You need a lot of cash on hand. However, there's a couple ways around this, and I want to present one of the best ways around this for anyone who's looking to get into real estate and rental properties for a very low cost. Now, this is super secret. Not a lot of people know about it, and I'm going to give you this wealth of knowledge for the low cost of just smashing that like button down below. It really helps me out, and of course the channel, and I'm just gonna hop right into it. Okay, so it's no secret how rental properties typically work. You're going to need a down payment, you're needing a mortgage and financing for the rest of the property, and this can be very expensive up front. The down payment can be anywhere as little as 3 to 5% to as much as maybe even 20 to 25% or even more depending upon the situation. On a $200,000 house, this could be anywhere from about $10,000 and up, so you will need a little bit of that fine, tasty bread. On top of that, you'll also have taxes. You'll have fees from the agent representing you. You'll have renovations that can be very, very costly at some times. But how can you get around this? Because some of us don't have just 100 grand sitting around to put into rental properties. Well, if you have $1, you can get into rental properties and they can pay you potentially monthly, quarterly, semi-annually, or annually. And this is a genius way to get into real estate for a very low cost. Now, this is a little bit of a roundabout path to invest in real estate and rental properties. Now, you can potentially invest in residential properties or commercial properties or even farmland and rent out the farmland to farmers for whatever. Now, you can take as little as just $1 and invest in something like farmland, residential properties, commercial properties. It can be up to you and you can choose it. And this God-sent gift to the financial world and real estate lovers like myself, it's called REITs, or real estate investment trusts. Now, these are very similar to ETFs or exchange traded funds, which I will be coming out with a short video on that, explaining that. So definitely keep tuned. But these trusts are basically where somebody will collectively take in money from various investors, and there is no set limit. You can invest as little as $1 to $1 billion if you got it. And the way that you can invest as little as $1 is through fractional investing through sources and platforms like Robinhood. Link in the description because you can get free stocks if you sign up with that link. So with these fractional shares, you can put in as little money as you really want and then get that equivalent of equity in your account. So these real estate investment trusts are very similar to basically a large mixing pot where everyone will throw in money, and then there's management team of professionals that will take that money, analyze certain properties, whether that is commercial office spaces, and they'll go and buy a large commercial space and then rent it out to various businesses, or they might go into single family houses or townhouses, you name it, there is a REIT out there for that. Now, there's a couple different kinds of REITs. Now, there's one called a physical REIT. This is when they physically invest in physical assets like a nice house or, again, a building. Then there's mortgage REITs, and these REITs do not invest in physical assets, but rather invest in the mortgage that's backing those. That way is a little bit more of a roundabout and a little bit more of a complex way, and I will throw a pop-up on screen now, and that's the business plan. Pause the video, take a breather, but basically they invest in mortgage-backed securities, where they will essentially take the earnings from the income on the interest of the financing, and they'll collect revenue that way. Third different kind of REIT is a hybrid REIT, where they will take both worlds of physical assets and these non-physical assets, such as the MBS, and make a combination of them. Well, how do you invest in these REITs? Because it's not like you can go and buy a house on your brokerage. Well, the good thing is these REITs actually sell shares or stock on the publicly traded markets. So you can go onto the S&P 500 and buy REITs. So back in the 1960s, there was the REIT Act that was signed, and this was supposed to help smaller investors be able to compete with the large-scale big fish of the sea, because it's very hard for these small-scale investors to invest in commercial properties and whatnot. They used a tax code to incentivize these smaller investors, and since then, it's gone pretty successful. There have been multiple REITs listed on the S&P 500. Back in the 1990s, the S&P 500 only had 0.2% of it was REITs, and now it's climbed to a 2.8% stake of the S&P 500. The beautiful thing about a REIT is they take this income from these properties or these MBSs that they have bought, and then distribute it to the shareholders in a form of a dividend. And as I mentioned earlier, these can be paid out in different timelines, such as monthly, quarterly, semi-annually, or annually. It really depends on your specific REIT. And REITs must distribute at least 90% of the income they take into its shareholders, so you know that the management team is not just taking it all for themselves and basically manipulating your money for their bigger pockets. Through these dividend payments, it really helps because it can give you a sense of a consistent passive income, although don't really expect a lot of appreciation of the stock, because every time that they gain value, they just immediately pay it out to you, the shareholder. REITs also must invest at least 75% of their total assets in cash, real estate, or U.S. treasuries. If they don't do this, they're not really a REIT. They must derive at least 75% of their income from rental properties or mortgage-backed securities. Other than that, if they have anything less, they don't condone themselves a REIT. They're all directed by a board of managers or trustees, and that way they are professionals who have been in this market for a while, and they will be able to make smart investments on your behalf. Or the cash that you put in, they will be able to manage it. Very similarly, like if you invest in Apple, you're indirectly investing in Tim Cook to make smart decisions with that money that you just gave them. They also must have at least 100 shareholders in their first year of existence, and they must not have more than 50% of their shares held by less than 5 people. Other than that, if they meet these requirements, they are a REIT. If they don't, well, they're not a REIT. Now, how do you invest in what REIT you want? If you want to invest in residential, commercial, farmland, mortgage-backed securities, etc., you just want to go to that ticker symbol that is publicly traded. Go to their website, Investor Relations, and they should be able to tell you what they're investing in. From there, you can, read the 10K or any annual reports, and you should be able to get a good understanding. So that's the way that a poor man gets into real estate immediately. And of course, from there, some people just consistently invest in REITs, even if they have millions of dollars, and they don't really have to go and have the headache of managing any of these properties. Or after a while, if you save up enough cash, you can go and do your own thing, whether that's flipping in real estate or buying and scaling rental properties. That's up to you. Although this is a way that you can get into real estate rentals as soon as possible with a very low barrier to entry. So I hope that you guys learned something in this video. Again, this is no financial advice. This is just for entertainment purposes only. Disclaimer. But of course, if you haven't already, smash the like button and subscribe for more content, because I'm going to be posting a lot more, especially on real estate, so stay tuned. Until then, good luck and take it easy.